All right, so we're going to talk a little bit about some equity moves, some positioning I'm in, and my continued outlook going forward. So, coming into this week, my idea, and it still is that we're going to see a pop into the VIXPERATION OPEX, quarterly expiration, and FOMC window, right, which happens on Wednesday. So, when you have a range like this, right, and you have a lot of people getting really bared up, you see a lot of bear porn, and you have a window opening up where the underlying flows and positioning of these dealers in the market impact the movement of the equities and the indexes. And we're filling gaps and we're leading into a binary event. What I want to see is either a trap into it or a trap off of it. And based off of this behavior, I'm going to lean towards the latter or the prior, right? Because when we look at this chart, I do think that we are in phase D. I think we're approaching phase E, phase E markdown. But this is a distribution, right? And everything aligns in terms of the individual names that look significantly stronger going forward relative to tech and financial individual holdings and sectors. But what we have here is the potential top that's being put in January, right? The very lackluster progression, the very notable legs here, this gap, here, this leg, here, here. And what we develop here is a path of least resistance, right? So we come into March, we see 3 consecutive gap downs into March. We see a nice wick. We see another bidder off of 676. That's now 4 consecutive buyers off of the top of this, the top of this gap from December. However, we see the follow through is very weak. The volume is diminishing. A notable leg stems off of this on a daily print from the March 5th candle. We see a weak bidder off of here as far as an intraday perspective goes, just kind of mitigating the imbalance within this range. Another gap down, another gap down. We see a lot of peak fear here. This is kind of that, everybody's really bearish. We sweep this gap from November. We push up into this gap from Friday the 6th, and then we get another leg, and then we obviously, it's a little bit speculative. We bleed a little bit lower, sweep the gap from November again. We get like a bear or a bull trap on Friday, and we're continuously, though, getting bid throughout the entirety of this session. So what I think is developing here is 1, 2, 3 lower lows into 662, a gap up to begin the week. We're going to ideally see a run up into or off of the Fed meeting that's going to fail the 676 spot. We're going to see a bleed down to 659, and then we can reevaluate after that going forward, right? Now, this does align with like a discount, however you kind of want to put it, however you want to pull your fibs. I do think that we're going to see this reclaimed, right? This is kind of our third attempt at a seller to press us below 671, and every attempt has gotten subsequently bid. And so if we break and base 671, it's a pretty clean long to 677. I think that happens, and then I think we have FOMC spark a lot of volatility, or spark a lot of liquidity and movement, crush the contracts, and then those contracts are going to be cheap. We're going to see the expiration and OPEX unwind those flows and positioning, and we're going to bleed down to 659 going into the week, or going into April, and potentially 655, and potentially, right, this floor could be wiped, right? We could have a path of least resistance being put in through the 650, 6550, 6055 range, to bleed us down to lower 600s to sub 600s within a year. I think something like that either happens, right, where we see maybe a sweep of this gap, a run up, a breakdown, an in-wog fill, a lower high, a push to 659. Or I could see a bleed off 671, an in-wog fill, maybe a 659 gap fill, and then we push 676, and then we see the lower high and markdown begin. So there's 3 ways that this can develop. I think 671 is the line in the sand. If we reclaim that, we should see 677 and then evaluate a short down to the in-wog fill. If we fill the in-wog, there's a long within that $3 window to 676, and then we can evaluate the short again, right? But it's all making sense. It's all aligning. All the individual names make a lot of sense as far as the behavior and the patterns that are being put in and established. And I really like how this is developing, right? You have a short here, you have a short here, you have a long that's being put in here, and then you have another short that's going to be established right here, regardless of whether it's to 659, 662, or 654. It's all making a lot of sense. We have a very similar look on QQQ where we can, find a higher low within this INWOG, push 607, and then push down to 589, right? And then we can develop a position and a focus going down to 550s. We have SMH. I do think that this is going to be our UTAD on SMH potentially being put in. XLK just looks very stagnant and stalled. XLF looks very weak, but some digestion to like the 51 range would be ideal coming off of the discounted bid. And then we can put in a lower high around that area. XLE and oil, right? I did have an oil short via SCO, but it really doesn't move well at all. I don't like how this moves. I thought it would be more of a leverage short against crude, and it just didn't really pan out how I wanted it to position-wise. We're getting a discounted short after the massive footprint. We're seeing the weak run-up into the golden pocket, and we should take out these lows, trade down to like 76, and maybe reset while we see a little bit of a run-up on equities. Maybe not all the way down there, right? Maybe we just, reset to like 90 flat. But I think that something like that is going to happen. We're going to see OVX begin to roll over. What's going to happen here is we're going to see a lot of call buyers at the top. We're going to see them sell their positions. We're going to see dealers sell off their spot to remain delta neutral. And it's going to cause ideally kind of a cascading effect that sends oil a little bit lower. And we can then see those kind of informed party positions begin to build themselves out again. I don't know about XLE specifically, but this is definitely running. We have a lot of names like Oxy that look phenomenal going forward. This is a really strong weekly closure to reclaim some gaps that we put in Q4 of 2024, right? It's phenomenal looking structure on a commons position on Oxy, up 40% on the year. I do like how that looks for a commons position, but when we go to like Mag 7 names, they just don't look structurally sound in my opinion. Like, I don't like how a lot of these look. I am still short NVDA via NVD. 185 is a big time spot. I am looking for 170. Should be a 15 to 20% return. But we could push 190 beforehand. Like I said, 185 is kind of the line in the sand. I do think that this is going to start to roll over next week. But I think Meta could maybe push a lower high. We'll have to see how that develops. I do think that Microsoft looks very strong right here. Right, we could continue to see a little bit of a run up into the month of April in general, and it could result in April expiration being the pivotal kind of tape flip, right? So I could be a little bit early as far as my ideas, but it could be now and it could be April because we do have kind of the end of quarter positioning and expiration as far as March 31st goes, so that could be very pivotal going forward and very impactful, right? This is a very strong Microsoft chart right here, right? Potential for a double inside week or at least a single inside week, and like maybe a reversion of 440 to 450. I do like how this looks. I have other positions though. I am long LLY via ELIL, a 2x leverage ETF, risking a 966 loss, targeting 1100. This is a very strong chart. I really like how this looks. The accumulation that developed down here, the run-up with ease, and then the subsequent reaccumulation that's developing within this range. And I think it has a potential to outperform. Like I said, though, could be a little bit. I have a little bit of room to add, but I do think that this going forward is a big focus of mine. These are my main two positions right now. NVD and NVDS still look super strong, right? When we have this, and these continuously get slammed, right? So it's not very notably like impactful to do like technical analysis on this. We have a big time volume print in October, a nice leg, a subsequent taking out of these lows and exhaustion, an even stronger leg with a notable amount of volume, the highest since November, and then like a higher low being put in here off the spring. And the same here with this just being the highest volume ever by a significant margin, right? And I do think that this can run up another 20% potentially if NVIDIA trades to 164. MU, I do think that this is a distribution. We're going to see the report Wednesday after hours. This could spark kind of a blow off top. Just a major run up. I mean, man, I was so confident in this at 60, and now we're at 450. That's insane. But I do think that this is developing a distribution. I do think that some of these, like, we could see a little bit of a spike going forward. It would be surprising for me to see like a little bit of a run up into the expiration in April, but I don't know how confident I am just looking at SPY and looking at a lot of the individual names and taking long exposure besides like LLY. I think that this pushes 676 and then 650s, and then we can evaluate after that. And maybe into April we see a lower high or path of least resistance, like a test or last point of support. But our last point of supply, I'm not very confident in long exposure. I do think that we could see a little bit of a run up into the expirations, but looking at how important 676 is, if that's lost, we're going to see 650s. And like I said, a couple of names individually look very well. Microsoft, the software in general, looks decent, right? S kind of looks very good as well, coming off the previous lows with a notable amount of volume. Path still doesn't look bad at all, in my opinion. A little bit speculative, though. But I am confident in the NVDA short. I think that NVIDIA is one of the most growth-looking names on the market. I am confident in the LLY long. I think this is one of the best-looking names in the market. And I think that I am confident in a long to short on SPY going into FOMC VIXPERATION PPI CPI OPEX. And then I am confident in reevaluating going forward. But when we have like a relatively pinned and compressed range in general, and that's going to cause a lot of dispersion where you're going to see a lot of individual names pull and constituents pull away from each other. So I wouldn't be surprised if we see NVIDIA bleed 10, 15%, while Microsoft runs 7 to 8 to 9 to 10% in the next coming weeks. That wouldn't surprise me at all. And then we have like XLV, push pretty high in these 160 range, maybe LLY run up, and then we have, AMD bleed, things like that, right? Of that nature. But I mean, that's my positioning. That's my outlook. Nothing is really surprising me about this price action at all. So yeah, I mean, that's pretty much just a quick perspective going forward. And I'll be back probably to talk again on Thursday or Friday about my exposure. Good luck.